In this video, we will look at the California home prices and the most recent S&P CoreLogic Case-Shiller U.S. National Home Price Index. Hey guys, my name is Mac Rogers. I'm a real estate broker here in the Bay Area. Welcome to the channel. These are the latest numbers from the California Association of Realtors for September 2021. We'll talk about the number of transactions and then we're going to go to the price decline. First, the good news. We closed out the third quarter by reversing a 4-month decline in the number of transactions and posting the largest monthly increase in more than a year. If you recall, sales have been declining in previous months. This reversal just proves the fact that the housing market is not done yet. Sales of existing single-family detached homes in September are up on a seasonally adjusted annualized rate. It's up 5.6% from August, but down 10.5% from when compared to September of 2020. If you recall, last year after the pandemic, our whole home buying and selling season got shifted or got extended. This year-over-year decline is not that significant since we are comparing it to a month or a season that has extenuating circumstances, namely the pandemic. The increase in the number of transactions was the largest month-to-month increase since August of 2020. Again, even though we continue to decline from the prior year. Overall, our number of transactions maintained a 16.8% increase on a year-to-date basis for the state. Right now, the thought is that as we get into the winter season, as housing typically slows down, there might be more opportunities for buyers that are waiting on the sidelines with less competition. With interest rates remaining low and the possibility of more inventory, this could really be a great opportunity for buyers heading into the end of the year. Our challenge is still the lack of significant inventory. Add to that a new crop of buyers that keeps coming on the market every year, the millennials, plus another wave in the next 5 years of the so-called Gen Z generation. And you can see that if we don't build enough housing, we will continue to see significant shortage continue on for years. Here are other key points from CAR's most recent September 2021 resale housing report. I'm just gonna read this verbatim. At the regional level, sales for all 5 major regions dipped on a year-over-year basis in September, with 2 regions dropping by double digits last month. The far north region continued to have the biggest sales decline from a year ago as the negative effects of the Dixie Fire lingered on, significantly impacting sales in the 3 of the 6 counties in the region. The Central Coast also fell by more than 10% in sales, with all counties but Santa Cruz dropping by double digits. The Central Valley down by 6.2%. The San Francisco Bay Area down by 7%. Southern California also down in sales from last year, but the declines were more modest at the regional level. Then we have these 3 counties that declined more than 30%. Marin down 39%. Glenn County down 38%. Napa also down 32%. All but 10 of the 51 counties tracked by CAR posted year-over-year decreases in closed sales in September, with 32 counties declining by more than 10% in sales from last year. Lassen had the sharpest sales decline from a year ago at 52.9%, followed by El Dorado 48.2% and Mono 40%. Counties with a sales drop from last year had an average decrease of 19.7% from September. 10 counties experienced a year-over-year sales growth in September. Yuba, up by 50.7%, had the largest sales gain from last year, followed by Del Norte 10% and Merced 8.2%. Now let's talk about home prices. September median home prices are down when compared to red hot August. Back in August, the median home price for California was $827,000. In September, that declined by 2.3% to $808,000. However, that $808,000 is still significantly higher when compared to September of 2020 by 13.5%. Last year, the median home price in California was only $712,000. This marks 6 consecutive months that California's median home price is above $800,000. There are signs of this might be slowing down, as this was the smallest double-digit price year-over-year in 14 months. If you think this is a silver lining, well, not exactly. The decrease is being attributed to the change in mix of sales. Higher price homes, million-dollar homes to be exact, continued to shrink on a month-to-month basis. The prices in the high-end market have been growing at a slower pace than the low-end market in the past 2 months. So the more the affordable segment of the market is where we are seeing faster price appreciation, which is what a lot of buyers are looking for. Affordable housing. The forecast, according to our chief economist, is that with the economic recovery remaining on course but progressing at a pace slower than anticipated. Rates are expected to rise modestly in the next few months but will remain low, while statewide home sales are expected to dip slightly next year. According to our latest forecast, housing demand will remain solid and post the second highest level of sales in the past 5 years. The market will stay competitive in 2022 as the normalization continues and home prices will remain elevated. In other words, it's still gonna be a hot market. This echoes what everyone believes is what's in store for the general real estate market this coming year. Yes, we will see a pullback in the overall transaction volume, but not to the extent that it will turn the tide into a buyer's market. Median prices in all the major regions continued to grow on a year-over-year basis, with 3 of them increasing by double digits in September. No surprise here, the San Francisco Bay Area had the largest jump, up by 21.7%. This was followed by the Central Valley, up by 15.4%, then Southern California, up by 15%, then the Central Coast, up by 5.8%, and then the Far North, up 5.7%. It's worth noting that the September year-over-year growth rate in median home price was the smallest for all regions except the San Francisco Bay Area. Lucky us, I guess. The state as a whole is still showing signs of continued price growth from last year. 44 out of the 51 counties tracked by CAR is showing year-over-year gain from 12 months ago, and 38 of them increased more than 10% from last September. Del Norte had the largest growth of 42%, followed by Humboldt 24.6%, and then Alameda 23.8%. 7 counties set new record high median prices in September as compared to 4 counties in the prior month. 6 counties had a drop in their county median price, with Lassen falling the most at 24.8%, followed by Glen 5.8%, and then Monterey 3.9%. California's housing supply leveled off in September as the market transitioned into the off-season. 3 out of the 5 counties reported by CAR declined in active listings from last September, with 24 of them dropping by 10% or more on a year-to-year basis. Marin had the largest decline in supply from a year ago, falling 52.8% from September of 2020. 4 other counties, including Orange, San Luis Obispo, San Mateo, and Mono, also plunged more than 30% from the same month last year. Over 1/3 of the reported counties improved in housing supply from a year ago though. In fact, active listings in 14 counties surged from last year by double digits. Santa Barbara led the pack with a year-over-year growth rate of 93.6%, followed by Lake 55.9%, and then Merced 44.1%. These declines in listings are more because of what happened last year. I talked about this before on another video. We packed so many business last year coming out of the pandemic lockdown, that when comparing our numbers this year, most of them will be down. Overall market competitiveness cooled down slightly in September as both sales growth and price growth slowed in September. Take note, it slowed. But I can guarantee you that if you are a buyer out there, it doesn't seem like it. 6 out of 10 homes still sold above asking price in the latest monthly report, but it was also the lowest level since February of 2021. The median number of days it took to sell a California single-family home inched up from 9 days in August to 10 days in September, and was slightly lower than the 11 days in September of 2020. This is kind of ridiculous, to be honest with you. These numbers are really low, meaning homes are selling fast. 21 days to 30 days is still considered fast. So even if we inched up to 14 days, it is still significantly a hot market. Here are the breakdown of the numbers for the different regions as well as the different counties. Now let's look at the latest from the S&P CoreLogic Case-Shiller Index. Take note that this data is actually for August of 2021. Year over year, the S&P CoreLogic Case-Shiller US National Home Price Index is up by 19.8% annual gain in August. Phoenix, San Diego, and Tampa reported the highest year-over-year gains in August. Phoenix led the way with 33.3% year-over-year price increase. San Diego is next with 26.2% increase. And then Tampa with 25.9% increase. 8 of the 20 cities reported higher price increase in the year ending August 2021, versus the year ending July 2021. Just like the California real estate market, on the national level, the US housing market is still showing signs of continued strength but slowing down. According to Craig Lazara, Managing Director and Global Head of Index Investment Strategy at S&P Dow Jones, every one of our city and composite indices stands at its all-time high, and year-over-year price growth continues to be very strong, although moderating somewhat from last month's level. Same thing, like I said, it's still strong, but it's slowing down. He continues on to say, in August 2021, the National Composite Index rose by 19.84% from a year ago levels, marginally ahead of July's 19.75 increase. This slowing acceleration was also evident in our 10 and 20 city composite, which rose 18.6 and 19.7 respectively, modestly less than their rates of gain in July. Price gains were once again broadly distributed as all 20 cities rose, although in most cities at slower rate than had been the case a month ago. Again, on a broader market, this is what pretty much everyone is seeing or experiencing. The velocity is slowing down. I see this firsthand with the markets that I serve. A little bit less competition, but competition nonetheless. Sellers are also still expecting above asking price and are getting it. We made an offer on this condo in Palo Alto that no one else was bidding at that time. The seller said no, and they were just gonna wait for another 2 weeks. Well, after 2 weeks, they had 2 more offers that came in and pretty much got a higher price than what we offered. I also spoke with a builder out in Oakley, California, and she said that there was about a 2-week period last month that there was hardly anyone coming out to check the properties. And then this month, all of a sudden, buyers are back again checking out homes. I think this can be attributed to FOMO, fear of missing out. The interest rates are still low and buyers are trying to take advantage. Then another thing is that buyers most likely are hearing on the news that things are slowing down and inventory is picking up, so they go out there again with renewed vigor. Overall, with the holiday season coming up and colder months are upon us, there could be some opportunities for home buyers, whether it's resale or new construction. But don't expect prices to fall and that you won't have any competition. It's still a hot market. That's our latest video. Really, it kind of feels like Groundhog Day reporting monthly numbers. It's just a cycle of never ending going up every month. I can see why a lot of people think that we are in a bubble. I can promise you we are not. Before the real estate market crashed in 2007, if you told me you wanted to buy 3 properties this month, I can tell you that we can do that no problem. Now, if you approach me and told me you wanted to buy 3 properties this month, I'll tell you, let's just combine that money and try to buy 1 if we can. In other words, there's nothing to buy, and that's why prices keep going up. Thanks for watching. I'll see you on my next video. Have a great day.